What's up, everybody? Good afternoon. A little later than usual, but getting in our recap here for today. As usual, we like to start on that 15-minute. Right, we can kind of show you the hourly as well. We have, since Friday, we spoke about this buy side being ran. We're just continuing to look for buy side to be met. So as we spoke about last week, we're not necessarily in the market of calling tops and bottoms. Okay, price obviously has been moving. But if you see here, we can kind of let you in on what we talked about earlier with our group, right? This here is kind of a buy model we're looking at. So we got the sell side of the curve. We're now creating that buy side of the curve. So we're just looking for old highs to be ran, right? We're looking for that continuation to continue to deliver higher. Buy side ran, buy side here ran. So at this point, we're just looking for this original consolidation. We're looking for these highs to be ran in here. So as we go to lower time frames, you'll see how we delivered this morning. Here on a 15 now, we have a breaker block that was formed. Low to a high to a lower low that gets broken. Right, if we now look at that last up close candle, right, refine it to the last up close here, you'll see that once we close above with this candle, we do return into it with the wicks, but notice how the candle bodies don't even close back on this breaker here. So we're wicking lower, wicking lower into these inefficiencies, right? This volume imbalance, the 8:30 opening. But ultimately, candle bodies tell a story. We hold the breaker, we first deliver into, right now this high here. This is a daily volume imbalance, so you'll see that, right? We ended up taking partials here, but it's just a daily volume imbalance. And then after hitting the daily fair value gap, we quickly return into this fair value gap, give us one more run into the high. Right, so we clear buy side just quickly. But really our objective for today was this daily fair value gap. So if we go to a daily chart, right, you'll see what we're talking about. This original fair value gap here, that was our target. And you see how we consolidate around that. We also had this daily volume imbalance, right? If we were to pull up those levels, you'll see how price interacts with that. So let's go back to the 15 now. Right, so you see the precision this offers. We do get above it barely, but you see how this is holding price. This is that daily volume imbalance low, and this is the high of it. So we're just consolidating in there. As we continue now to work onto these lower time frames, right, 5 minutes, same thing. So this is the 15-minute. It's also a 5-minute. After delivering into the fair value gap, we come back, find support, hit that high once again. But really, we're just consolidating there. So you really see that daily fair value gap was the target for today. Let's get down to the 1 minute now. Get into the finer workings of things. So we have this higher time frame breaker that we're speaking of. Right, we were kind of playing off of this here following the 9:30 open. But we're inside of this breaker, so until we get below it, right, we're still looking for higher prices. Right? Even though we're creating this move lower, this is the opening Judas swing. So at 9:30, consecutive candles to target sell side. We spoke of how we would look for price to return into some sell side liquidity, because our macro perspective is still higher prices. We're wanting to see price expand higher. But since we were already moving higher before the 9:30 opening, it would just make sense for price to return and pick up some opposing liquidity, right? Also get people trying to short in here. So people that don't understand what they're looking for, they're trying to short this whole move. And if they don't take any profits or partials, right, you see that they get stopped out here. So we're engineering liquidity while at the same time picking up counterparty liquidity, right? We understand what's happening here. So once we pick up the sell side, we're really just waiting to see some type of confirmation to look for longs. For us, that really came in the form of getting back above old premiums. So although we are looking for longs, we still need to see something that can give us, right, a good entry. Right, the first one really comes here. We leave sell side, we pick up the sell stops, we get back above the breaker, and we leave behind the volume imbalance. So already you could be looking at this volume imbalance. You'll see we paint outside the lines just a little bit, but ultimately we don't get any lower than the candle that creates the volume imbalance here. Right, so the candle that created the volume imbalance low is here. Stop would be under that low. We never return back underneath that as we target buy side. Right, that's a good opportunity. For us, we were waiting to see a little bit more confirmation. So as we leave the breaker, breaking through a high, we now can use that as well. Right, for us, we liked this volume imbalance. So we were looking at the opposing premiums. Right, we're understanding that we're still expecting price to get higher, so we want to see premiums start being broken. Right, and what I mean by that is this fair value gap here. Right, so all the bearish fair value gaps we made on the way down, we want to see if those can get broken on the way up. Right, that will give us a good indication that we're on sides. So right away, we see how price gets right up and through this first one here. Right, we close above it, we would expect it to act in as inversion. If we drag it out, you see that we do find support here, so that was nice. We end up trading higher, right, and now we break through the second one here. At this point, that is where our entry came. Right, so the entry that we shared this morning, we're creating a volume imbalance here as we are leaving the fair value gap. As I often say, that there is not random. Creating a new discount as we are breaking through an old premium. So our first entry you saw comes right on that fair value gap low, or volume imbalance, excuse me. Same idea, stop underneath now this inversion, as well as the candle that creates the volume imbalance. So two discounts that should hold us. You see how precise and perfectly priced holds that, and we deliver into that short-term buy side. Right, we were targeting, however, higher time frame targets. So we had this high, and this high that we were aiming for. Right, if I drag out just the first one, right, our target was this swing point here. So you see us take that partial right at the high. Right, this was a short-term high, and we understood since this was below this swing point, we would just look for this here to be targeted. So we got up into that. Right, as we did that, we partialed out, and we noticed that we actually created a new fair value gap. So here, we were looking to see if we couldn't actually hold this fair value gap. We do get back underneath it, so we did take a little stop out here. But ultimately, we're just holding the original inversion. Right, we wanted to see if we couldn't hold this fair value gap. We give us a little deeper retracement than we'd like, but we're still holding and respecting discounts. So at this point, we break back above, we revisit that fair value gap one more time, and then we're finally able to accelerate and close back above this fair value gap here. When we do that, what do? We create another volume imbalance. So the same way we see here at this fair value gap, as we're closing above, creating a volume imbalance, same thing is happening here. We're leaving this fair value gap we're looking at. We're doing it with a volume imbalance, which is not random. We can now expect the volume imbalance paired with the fair value gap to act as support. So right, we can enter there, stop underneath the fair value gap. And as you saw, we were just targeting higher prices. So we had a buy side here. This level is the daily volume imbalance, and that's the volume imbalance high. So multiple areas you could have looked for. Right, we were content with just getting buy side and reaching into the daily volume imbalance low, paired with the daily fair value gap. Move this for now. We saw as now we leave and break above this fair value gap, from there was really off to the races. We created one more volume imbalance here, giving you one more opportunity to enter, right, as this candle wicks into that volume imbalance, enter there, and then we attack that buy side level. Notice how we hesitate here initially, and this is where we were speaking about. We need to see if price wants to confirm the idea of going higher, or if we're going to return and start breaking structure lower now. So this fair value gap here was kind of what we were using. When we see this fair value gap get left open, and now price close above the old high, this becomes a breakaway gap. So we're no longer expecting price to return into this, because we've broken through an old high, and we still have buy side objectives to be met. And that's why you see us now go in on this fair value gap here. So we understand this is no longer in play. This becomes a breakaway gap, which means any new discount that gets formed should be held. Right, so this fair value gap, although some may think that we're chasing price because it's moving, we understand the PD array matrix here. We understand that old highs getting broken will now act as discounts. So in reality, from this old high up to our daily fair value gap, that is a new range, which means that this fair value gap here is in a discount. It's also just a discount itself being a fair value gap. And that's where you see us enter as well, right? So we could show quick just, right, as we turn into that, right, we close here at the buy side first, we return into that fair value gap holding perfectly, just like what we like to see, right? Hit the consequent encroachment, and then we delivered into the daily fair value gap high where we were looking for. So in this move here, we're not expecting price to return into this because we've closed above the buy side and formed a new discount. We're not wanting to return into these new discounts here. This becomes the breakaway. Newest discount holds us. Volume imbalance here. Once we create the volume imbalance, we can trust that this swing low here will be safe, and we just follow price as it delivers into that fair value gap. After we hit that fair value gap, we create a short-term high here. Right, as we're creating the short-term high, this is also the daily volume imbalance high. So notice that. We create a short-term high perfectly aligned with the daily volume imbalance. We continue to say that is not random. And when we see now this leg here run up and clear the short-term high, hitting the daily volume imbalance, and now rejecting aggressively and breaking structure here, this is a textbook YouTube model. Right, this is what we would always expect to see, just as Michael has taught, clearing a short-term high with a higher time frame premium in mind, shifting structure while leaving behind a fair value gap. So as price creates this YouTube model, leaving the premium, right, we have no hesitation to enter on that new fair value gap. Stop right above it, and we were simply targeting a return into this range. So now this fair value gap, right, if we were to take the range from this low up to the highest high, this fair value gap is under that equilibrium. So if we're going to return into equilibrium, right, it would make sense to target that fair value gap. That is what our target ends up becoming, and you see how nicely we deliver into that. We do run it one more time, right? This is more of just a turtle soup, however. We're running this low, we then reverse. Notice how as we get back above this fair value gap, so still the same fair value gap, we're getting back above that, we're getting back above this bearish. Right, so they're aligned, as we say, continue to say, that's not random. We're creating an inversion, getting back above the fair value gap and creating a new 1 minute. So once again, this would be a very high probable setup to hold, right? We can trust and use this fair value gap. We can use the inversion, really any of them. We can trust that that'll hold us and now deliver us back up into, we would aim for this low-hanging fruit here. So just short-term inter-range liquidity would be the first target, buy side. You notice that we did run that external range once more. Right? So if we drag it out into the afternoon, we were able to get up in there. So that was that external range being ran as well. We're going to move the daily volume imbalance. That's what this level is. Just want to show one more time how precise price reacts there. So this higher time frame premium on the 1 minute chart, right, we're using that continuously. Move that for now. But you really see this would be the clean setup here. So clearing a low, 1, 2, 3 drives, well, forming 3 drives at the same time, right? 1, 2, down to the 3rd drive here. So we would expect that these highs start being targeted, and that's what we see. We first clear both of these, find support, and then ultimately get back up into this swing high here. Once we do clear this buy side, we have some slight consolidation at that daily fair value gap again. So you really see how we spent so much time around that daily fair value gap. We're engineering equal highs at this point. So as we head into power hour in the afternoon, right, we have engineered equal highs underneath external range liquidity. You'll see that during power hour, we come back down to pick up a short-term low. So we're picking up liquidity right here. And notice we do it quickly again here. All while we're turning into, right, you'll see this down close candle. Right, not only is it the down close candle, it's our original inversion. So if we drag out this fair value gap, you'll see how we're finding support here. Right, so we clear short-term low, we clear a short-term low, we then leave their fair value gap again with a new fair value gap. So if you've seen this repeats over and over, and these are the setups we like. When we leave an already predetermined discount or premium, right? Obviously we're looking at buys here, so it's to be a discount. You could flip everything we're talking about here for sells. But in this case, when we're leaving a discount while creating a new discount on the 1 minute, we really like to see that. And this, right, is the negated volume imbalance. So it's another PD array that is being created here that we like to see. When we open with the bearish volume imbalance, don't even wick lower and completely negate it, closing higher, we can trust that this fair value gap here will hold us. Right, so you see that that fair value gap holds, right? Swing lows get left behind, and then ultimately we can target first the equal highs and then that external range liquidity. On the way there, you'll see that we actually do create a breakaway gap here. So price was in a hurry, right? Because we spent so much time in here that once we break and close above this high, price is really in a hurry to leave, right? Because what have we created? Low, high, lower low that gets broken. Up close candles become the breaker. So you see that this fair value gap is below the mean threshold of the breaker, so there's no reason to return into that. And just to show the level, right, so you really understand what we're talking about. If we're expecting price to be bullish here, then we wouldn't want to see the mean threshold of the breaker be violated. And since the 1 minute fair value gap is underneath that, we would expect that this gets left open. So you see we close above the breaker, tap that mean threshold once, close above it again, and from there we don't even try to get back down below that level. So ultimately we reverse, deliver into the buy side. Lo and behold, once we hit that buy side, what do we create? The YouTube model again, which is also the breaker, short-term high being cleared. Right, when we break structure here at these equal lows, we actually don't even revisit this fair value gap. So at this point, price, right, anyone that had gone long in here during power hour and was lucky enough to hold up into this buy side, if they didn't take any partials, if they didn't close their position, this movement here is meant to punish them, right, penalize them. It's not giving anybody an opportunity to enter, while at the same time it's moving aggressively back into this low. So price was really just bouncing around liquidity points here. Right, we're going from buy side, we're clearing sell side, creating buy side again, right, clearing sell side here, attacking that buy side, and then ending the day delivering into that sell side. You'll see now, once we did that, we just returned into the fair value gap, and that is what we have been consolidating since. So overall, not much movement this morning, right, or today. We kind of expected that Monday and Tuesday without any real high impact news events. So we would expect kind of a smaller range. That doesn't mean we can't take advantage, as you've seen. We just have to know what we need to look for. Right, so we take advantage here. We're able to take longs up into here, take longs into the daily fair value gap, and then capture the shorts just back into that range. As you see, there were still setups offered in the afternoon. We just kind of avoid that, right? Had no interest. We were content with what we got in the morning. So if we continue now to just kind of see where we can go from here, I'm still not trying to call tops, okay? So we've cleared buy side. That was a real shallow run on this buy side. So for me, I still think we can get into this here, this buy side, right? Continue to dig into the daily. So this is the daily fair value gap. Continue to dig into that. And ultimately, I would like to see these swing points here be met. All right, so we have a swing high. Oh, we have a swing high here and a swing high here. This is that original consolidation as well. So I'd like to see price continue to expand higher. Right, on a daily chart, let's kind of hide these. On a daily chart, we would see if these two daily highs here couldn't be met. If we can get through those aggressively, we would look for this fair value gap. If we really want to expand, right, obviously these highs here, but that might be a longer term sense. We can get a retracement back into this range and still expect higher prices. For now though, right, we'll continue to stock long setups. Obviously, as you saw, we can scalp and go the opposite direction if we understand what we're looking for, but we really think that price wants to dig higher. So the best and the highest probability setups will come looking for longs. We have Powell speaking tomorrow and Thursday as well, so not too much interest in actually trading. We will sit around though and see what we can get. So we'll be back same time tomorrow morning, 9:25 Eastern. And until then, have a good night, everybody, and we'll talk in the morning. Take care.